Bitcoin Ordinals, launched by Casey Rodama in January 2023, introduced a protocol that allows arbitrary data including images, text, audio, and video to be inscribed onto individual satoshis using Bitcoin's transaction witness data. The inscription creates a permanent, immutable record on the Bitcoin blockchain, with a specific satoshi carrying the inscription track through Bitcoin's ordinal numbering system that assigns a unique sequence number to every satoshi based on mining order. The cultural and financial impact of ordinals has been remarkable. Over 50 million inscriptions were created within the first 18 months of the protocol's launch, generating billions of dollars in marketplace trading volume, sparking a significant philosophical debate about Bitcoin's purpose, and demonstrating for the first time that demand exists for non-financial Bitcoin block space. The Bitcoin Ordinals phenomenon directly and materially changed the trajectory of Bitcoin's fee market. For institutional investors, Ordinals is important primarily as a fee market development story rather than as a digital collectible investment opportunity. The demonstration that non-financial users will pay significant fees to use Bitcoin block space is one of the most important data points in the Bitcoin security budget debate, providing empirical evidence for a fee market revenue source that was previously entirely theoretical. The ordinal numbering system is the conceptual innovation that enables the rest of the Ordinals protocol. Before Ordinals, Bitcoin satoshis were fungible. One satoshi was indistinguishable from any other satoshi. The ordinal numbering system assigns each satoshi a unique identity based on when it was mined, allowing specific satoshis to be tracked as they move through transactions and making it possible to inscribe data that is uniquely associated with a specific, trackable satoshi. The inscription mechanism uses Bitcoin's existing SegWit witness data field in a way that was not anticipated in the original SegWit design but is technically valid under Bitcoin protocol rules. This is a clever application of existing Bitcoin scripting capabilities rather than a protocol change, which is why ordinals could be deployed without any Bitcoin consensus changes or soft forks. The data is stored in the witness portion of the transaction, which benefits from a 4x weight discount compared to regular transaction data. The immutability guarantee is what distinguishes Bitcoin inscriptions from other blockchain NFT systems and creates their specific value proposition for digital artifacts. Unlike Ethereum NFTs, where the token metadata often points to external storage that can be modified or deleted, a Bitcoin inscription stores the actual data on the Bitcoin blockchain itself. The permanence is as durable as Bitcoin's blockchain, which is secured by hundreds of billions of dollars in mining infrastructure. The Ordinals timeline reveals the rapid ecosystem development from a novel protocol to a significant Bitcoin use case in less than 18 months. The progression from individual digital artifact inscriptions to the BRC-20 fungible token standard was faster than most observers anticipated, with the BRC-20 standard created just 2 months after the Ordinals protocol launch. The May 2023 milestone, when Bitcoin transaction fees exceeded block subsidy for a full day, was the most important institutional data point in the Ordinal story. For the first time in Bitcoin's 14-year history, the theoretical fee market discussed in security budget analysis materialized as an actual event. One day of fee dominance does not resolve the long-term security budget question, but it demonstrated that the mechanism exists and functions when block space demand is sufficient. The April 2024 Runes protocol launch at the halving block was a strategic choice that demonstrated Rodama's awareness of the security budget debate. By launching Runes, designed as a more block space efficient fungible token standard than BRC-20, precisely at the halving block where fee market development is most consequential for miner revenue, Rodama was explicitly attempting to create sustained non-financial fee demand during the period when block subsidy had just been cut in half. The Runes launch generated significant fee revenue in the weeks following the halving. The Bitcoin Ordinals ecosystem metrics demonstrate that the market developed rapidly from novelty to a billion-dollar industry with hundreds of thousands of active participants. The 70 million inscriptions by mid-2024 represent one of the most significant demonstrations of Bitcoin network utilization for non-financial purposes in Bitcoin's history. The 50,000+ BRC-20 tokens created represents the speculative excess that characterizes early crypto market development in any new token standard. The vast majority of these tokens were created for speculative trading rather than functional purposes, with most having minimal or zero ongoing trading volume. This speculative excess mirrors the dynamics observed in early ICO markets, early NFT collection launches, and other new crypto primitives where the ease of creation leads to massive supply with correspondingly limited persistent value for most individual tokens. The $200 million in fee revenue attributable to Ordinals activity in 2023 is the metric most relevant to the institutional Bitcoin security budget analysis. This fee revenue was created entirely from non-financial block space demand, representing a structurally new revenue stream for Bitcoin miners that did not exist before January 2023. Whether this fee revenue is sustainable as the speculative fervor around BRC20 tokens moderates is the key question, with Rune's activity in 2024 suggesting that non-financial fee demand persists even after the BRC20 speculation peak. The Bitcoin philosophical debate about ordinals has been contentious but has limited practical implications for institutional analysis. Bitcoin's protocol does not allow any mechanism to discriminate against ordinals inscriptions at the consensus layer. Valid transactions are valid transactions regardless of what data they carry in witness fields. Individual node operators can filter inscriptions from their mempools, but they cannot prevent inscriptions from being included in blocks by miners who choose to accept them. The fee market implication of the debate is the most analytically relevant dimension for institutional investors. The Bitcoin maximalist position that inscriptions represent spam that unfairly raises fees for legitimate financial transactions reflects a preference for cheap base layer transactions for payment use cases. The ordinals support a position that any use creating fee market demand strengthens Bitcoin's long-term security is more aligned with the security budget analysis perspective. For institutional investors focused on Bitcoin's long-term value proposition as a store of value and monetary network, the ordinals debate is primarily relevant as evidence about Bitcoin's fee market development potential. The demonstration that non-financial users will pay substantial fees to use Bitcoin block space is positive security budget evidence regardless of whether one personally finds digital artifact speculation aesthetically appealing or philosophically aligned with Bitcoin's original design intent. The ordinals investment risk framework reflects the genuinely different risk profiles of the different components of the ecosystem. The immutability and permanence of inscriptions themselves are among the strongest guarantees available in any digital asset class. The market infrastructure, pricing mechanisms, and speculative demand for specific inscription collections are among the most volatile and unpredictable in the crypto ecosystem. Fee market volatility is the most operationally relevant ordinals risk for institutional investors who are not specifically investing in the ordinals ecosystem but hold Bitcoin and transact regularly. During peak inscription activity periods, Bitcoin-based transaction fees can spike dramatically as inscription users compete for block space with financial transaction users. Institutions with regular Bitcoin transaction requirements for custody transfers, rebalancing, and settlement should model inscription-driven fee spikes in their operational cost forecasts. The BRC20 token speculation risk is perhaps the most important institutional caution to emphasize. The thousands of BRC20 tokens created during 2023 represent a market structure almost identical to the 2017 to 2018 ICO bubble, an easy token creation standard, massive speculative interest driven by early adopter gains, and the inevitable collapse of most tokens to zero as speculative demand normalizes. Institutional interest in BRC20 tokens as investment assets should be approached with the same skepticism applied to ICO investments, with sizing limited to what the institution can afford to lose entirely. The Bitcoin Ordinal story is one of the most consequential and surprising developments in Bitcoin's recent history. A protocol deployed without any consensus changes, built by a single developer using existing Bitcoin scripting capabilities, has generated 50 million inscriptions, hundreds of millions in fee revenue, and the first sustained demonstration of non-financial Bitcoin block space demand in Bitcoin's history. The institutional significance of ordinals is primarily analytical rather than investment-oriented. The ordinals ecosystem itself, with its digital artifact markets, BRC20 speculation, and inscription-related investment opportunities, is predominantly a retail-scale speculative market rather than an institutional investment category. But the fee market evidence generated by the ordinals era has materially improved the analytical case for Bitcoin's long-term security budget, which is directly relevant to institutional Bitcoin valuation models. For institutional investors who have been tracking the Bitcoin security budget question as a potential long-term risk to Bitcoin's store of value thesis, the ordinals era represents the most positive development in the security budget debate since the fee market question was first raised. The demonstration that non-financial block space demand can generate fees exceeding block subsidy during peak activity periods creates an empirical foundation for optimism about the fee market development that the long-term security budget requires.